Let's talk about the stock of this year, ITC. And of course, all the memes have reversed, right? It's really been the strongest stock. It's up over 8% in the last 5 days alone. And of course, if you look at the year to date, the 1 year move is 42%, trading at 3-year high. Abneesh Roy is joining us. He's Executive Director, Institutional Equities at Edelweiss. Abneesh, good morning. Things can change in market, right? So, what's your sense? What's led to this turnaround in ITC, and what next? Is it a stock which can perhaps still outperform from here on?
Yeah, we expect ITC to outperform most of the consumer stocks from here on, also in the near term, medium term. In fact, we have just upgraded our target price from 325 to 340. We have done a detailed annual report analysis for FY22. So we have a 30% weightage to ITC in our model consumer portfolio. That shows a clear preference for ITC over the medium term. So from the annual report, multiple new takeaways were there. One, of course, is there is currently some concern of a windfall kind of an impact, which we saw in some of the oil companies. Can that happen in cigarette companies, for example? We see very, very low probability of that. Anyway, February 1st and GST meetings are where cigarette taxes are discussed. But if you see in the annual report, ITC has clearly showcased that a benign tax environment is good for the government, good for the consumer. In benign environment, government sees a tax collection increase of double digit versus a harsh tax regime where only 4% kind of growth happens. So in FY23, we expect legal cigarette players to gain market share because illegal is almost 1/4 of the market. In FMCG, ITC is setting up a new factory, and that shows the confidence. In FY22, they came out with 100 plus products. And also we are seeing that the PLI scheme, which government has announced, that will be very positive for ITC from an exports perspective. We are also seeing the company being very aggressive on the e-commerce. They have come out with their own portal, which is there in many cities. And they have really scaled up the physical distribution also. They have done a lot of lateral hiring in FMCG. So FMCG also, we are seeing a marked increase in aggression versus what it was in the historical period. Rest of the businesses also, FY23 is likely to be a strong year. The agri, paper, hotel, all should do really well. So net, yes, from here on also, ITC should be a must-have in the model consumer portfolio. And next key monitorable, in my view, will be on the February 1st.
Okay, that's on the business, right? But generally in a volatile market, stocks like ITC, which are not only defensive plays, but they're also dividend plays, do well. And I guess that was one of the reasons why the stock had an edge over others in the last many weeks. You think that has played out?
Absolutely right. Globally also, cigarette stocks have come back in flavor. ITC, in fact, has been very proactive in terms of ESG. If you see some of the global indices, ITC is there at the top in terms of ESG. So 4% dividend yield plus inexpensive valuation, the stock is up sharply, almost 30% in the past few months. Still, if you see, the reasonable valuations are still there, 20 times P multiple. And we are seeing EPS growth, which is very likely to be in double digits, which is going to be a challenge for most other sectors and most other consumer companies also. So yes, you are absolutely right. It is a safety haven, but it is not just the 4% dividend yield. The EPS growth also will be in double digits in FY23.
Abneesh, since we have you with us, I wanted your thoughts on something like an Asian Paints, because after a long time, now some people are saying maybe this time the headwinds are just way too strong. Do you think the history will repeat itself and it will again sort of fight back, or would it become a bit of an underperformer from here?
I think the company has showcased its ability to gain market share. If you see last 1 year, 2 year, 3 year, any time frame, Asian Paints under Amit Single, the new MD, has been very aggressive, and the smaller players have been losing market share. Now coming to Grasim, the launch is still 5-6 quarters down the line. So still a lot of time is available. I think in 5-6 quarters, there'll be multiple periods where you can play Asian Paints. So in the near term, yes, we expect strong volume growth for Asian Paints to continue because of market share gains and because clearly the base is also favorable in Q1. But on the full year also, because of the adjacencies, we expect a strong volume growth for Asian Paints to continue. So now the next monitorable will be crude oil prices. So definitely we have seen past few months crude has been fairly range bound between 105 to 120, and company has taken further 2% price hike in Q1 FY23, building on the 18% hike they had taken earlier. So net, yes, we continue to like Asian Paints. It is also having 20% weightage in our model consumer portfolio. So definitely Grasim will impact smaller paint companies, but the launch is 5-6 quarters down the line, and any consumption, it takes 2-3 years for a sizable impact, because paints is a very tough segment. We have seen global players exit India, so it is going to be very tough. But yes, Grasim can impact the smaller players, not too much Asian Paints.
Okay, all right. Hi, Abneesh. Good speaking to you. I wanted your view on HUL. You know, yesterday we were getting in news that input costs are cooling down. You know, HUL and Britannia, actually, both of them, because both of them have seen a sizable correction from the recent peak. Now, input costs are cooling and demand is fairly stable, is what we understand. How would you view both these two stocks from here on?
So definitely palm oil was a key concern. It went up in the last 2 years from almost $700 to almost $1,900. Now it has come off significantly. So this will benefit HUL in its soaps portfolio. And that's a sizable part of the business. So we expect that with a 2 to 3 month of lag, in H2, there should be good margin expansion for the soap players in the gross margin. Similarly, biscuit companies. Now, last 2 years, mobility has been a key issue for HUL. So its cosmetics business, laundry business, out of home did get impacted because of the mobility issues because of COVID, which I think is no more of a significant concern. Also, HUL is gaining market share in 75% of the portfolio. That's true even for Britannia. So we do expect these two companies to gain margins back in the second half. Q1 margins will be under pressure for both HUL and Britannia. But H2, clearly, we are getting good visibility in some of their portfolio. For Britannia, definitely palm oil is a key raw material. So we are positive on both the companies.
Okay, finally on Jubilant FoodWorks, a lot has happened, right, with these major exits taking place on the corporate front. Then you have Devyani International, who's sort of picking up pace with its new outlets, etc. What do you do with a name like Jubilant now?
I think Jubilant Foods, a great company, structurally very strong. If you speak to any QSR competitor, they say Jubilant Foods is the golden standard in QSR. But yes, near term, there are 2-3 overhangs apart from the leadership churn, which we have seen. Recently, there was news of one more person joining Britannia. Let's see when that happens. But also now with in-home consumption taking a backseat, we are going to see consumer go for more options. In fact, we have seen a study wherein consumer is downtrading from some of the QSR, some of the street food back to 5 rupee, 10 rupee pack of packaged foods. So in fact, noodles and biscuits saw very strong growth in the last 3 months prior to this quarter. We need to wait for this quarter numbers. So what I'd like to highlight, yes, great company, but slightly longer term, we have to see. In terms of raw material also, we need a bit more comfort. So yes, Jubilant Foods will be slightly lower in the pecking order, but we like the company from a valuation perspective.
Okay, Abneesh, thanks a lot for joining us. And giving us the views on all these big stocks. The market's making a big move now. You know, this is something we discussed in the morning as well, that perhaps a cleaner move is opening up now that, you know, the Nifty has taken support at the 20-day moving average, didn't really halt. And sometimes, you know, you've got to focus on price action versus news. Despite all the bad news thrown at the market refused to sort of break the lows, and now it's moving higher, 59.67 now on the Nifty. Remember, the 50-day moving average comes in at 16,187. On the Bank Nifty, that number was 34,400. We're almost there, a matter of just about 130 points more on the Bank Nifty. That's up about 1%. So that's also looking good. Will be interesting to